Hello friends, welcome back for more Bitcoin technical analysis with me, your friend Rocky Outcrop. Today's episode I'm going to try and keep a little bit briefer, and I'll be ever so slightly less enthusiastic throughout as I'm suffering from cluster migraines at the moment and and photophobia. So that's a good laugh. Let's just dive on into the charts and see what Bitcoin's been getting up to, shall we? Okay, here we are in the charts. I'm just starting off today on the 4-hour chart. Before we dive in, I suppose, here's the current price, 8782 up there above my cluster migraine. And we can see, I suppose, as well, that the lows today have been 8,740 on this Gregorian calendar day and the highs of 8,921. That's, of course, this Gregorian calendar day. We can look back and we can see that just there yesterday evening, of course, after filming and publishing the episode, we came up and reached our target in around that 8,950 level and came back down again to our next target of that 8,750 level, and we got that $200 move down the way. Now, if you were following along with that, that's good, well done, good on you. I'm not a financial advisor, and none of this is financial advice, so of course, you made all those decisions on your own, and well done to you. But that's what we were kind of looking at yesterday. If we would be able to take profit on any longs up in that area, and if we were to have shorted it in around and chosen to have shorted that resistance, we probably would have taken profit in around this area. Now, I know that's not very huge of a move here overall, but it's still a significant enough percentage. If you were just playing it purely from the resistance down to where we came there, you're looking at a few percent, and that's nothing to be sniffed at. And it was fairly predictable in a sense, in that we had factors on the 200 simple moving average, for instance, up there, and on this timeline you can see we had things like the 50 simple moving average above us. So we know, and of course the 21 EMA down here as well. So we knew that there was this potential to happen. Now, I suppose it wasn't so much predictive because charts inherently are not predictive, and it's always important to reiterate that, so I should really correct myself there. But instead, there was a lot of potential for that to happen, and trying to take advantage of that whilst managing your risk was a lot more doable, a lot more achievable whenever we had identified these targets here for as ways of doing it. So it became a low risk trade, and that's really what we were looking at, essentially. So here we are looking at the 4-hour chart, and what I'm trying to figure out is if there's anything warning signs coming up here as a part of this overall upward movement, or what we actually achieved yesterday in terms of what we were looking out for in the video. So we thought if the prices came up here, the question would become whether or not we would actually able to open and close above this line, because that would constitute a higher high on the 4-hour chart compared to over here. Well, we didn't. We actually just got as high as that and no higher. So we've not had a higher high, and this is more of a consolidation sideways channel currently at the moment. Perhaps it's one of those rectangle things which we could look at in some other period of time, but generally speaking, this is just a sideways consolidation we've got currently, and the question then remains the case of whether or not we'll trade within this range, because that forms a range, this sideways consolidation period, whether we'll continue in there or whether we'll break out of it at some point. And if we did break out of it, it's probably worth pointing out that there's a big drop off on the VPVR here, and we'll look at that again on the 24-hour chart in just a moment, and you'll see it's consistent, so that there's the impetus, if we were to break out of it and motivation came along with that from the bullish side of things, then you could imagine the prices going up fairly quickly, up a few $100s at least, where we've seen a drop off in trading. Now, I know that discounts trading on the upside because it's not on the visible range of the screen, but if I just go to the left, you can see that the story actually continues and remains the case. You can see that, and you can see on the 24-hour chart too, so we can check that there soon. We know that the current upside is partly as a result of the compared to, say, this section here, is as a result of the this bullish divergence, that we saw on the RSI throughout this period here. You can see the RSI is going up and the price is going down, and on the stochastics here, and MACD as well, you can see that while we were putting in lower lows in the price action, we were putting in higher lows on the oscillators down below. So we could anticipate that, which is why it became crucial as to whether or not we'd open and close above there. Now, given that there's a drop off here, and people are inclined always to think, well, if there's a drop off, then immediately, as soon as we touch it, we get sucked into it through some sort of event horizon and just shot out the other side in profit. Well, that's not actually how these things go. The drop off in trading activity actually affects both sides of the market. Really what it does is it puts the ball in one side's court and says, well, you know, it's up to you, it's your shot if you want to go for it. And quite often that actually what happens is they say, oh, we'll wait for a minute. So despite the drop off in trading activity, it didn't, and therefore the likelihood that it would have taken less impetus to push the market up. Whoever didn't decide, everybody, pardon me, whomever, all of the market didn't decide to actually do that at that point there and then. And I think it would have needed to have opened and closed a 4-hour candle up above this area for more confidence to have come in, to have catapulted us up that direction. So that didn't happen. Now, but we don't have anything else, any real warning signs to be aware of, other than perhaps the fact, you know, that we've come up here into this area here of what's known as the overbought area. And as you can see in the past, when this happens, as in here and here, that you could say that it leads to drop-offs in the price. So, you know, you could have that, in which case you could come down to the bottom of our range here. But as well, you know, in order to get up and then make it on up out of those areas, like if we look here, you need to come up, and then as you come up into this area, you can even keep going up as the prices come down to retest it. And as you can see, the prices kept going up throughout that period. Then we came down here, and they didn't go down very much in terms of price action. As you can see here, came down a fair amount on the stochastics, allowing it to reset, and then we actually continued to go up and make higher highs in the prices throughout this period. So as you can see, that isn't actually, you know, a strict roadmap. It just tells us that there is the potential. And while we're looking at this area overall, then we can know that that's, of course, the potential. And on the 4-hour chart, you've got this, the 21 EMA down here and the 50 EMA above us. And, of course, that green line and that magnolia line there. And we'll look at those in just a second more. So if you've not been following along, you might not know what they are. We'll go to the 24-hour chart, and you can see 382 there is the green line, and the 50% retrace line down here is the magnolia coloured one. Now, where you might remember as well that the 21 EMA was in and around this area towards the bottom of the prices there. That's just here, this yellow line at 8760 or so at the minute. And on the 24-hour chart, you can see that the 200 simple is in at 8730 or so. So you would be testing off either of those just across different timelines at that particular juncture. And you can see then we've got the 100 cyan. This is the cyan line, the blue line. That's 100, the 100 exponential moving average. And while, you know, that isn't like the biggest dictator of the offer up the greatest of supports and resistances, as you know, it's the case with a lot of moving averages all of the time. Really. Then, but it is actually quite a positive thing to be up above it. So if the prices were to be able to open and close above there, that would be a positive thing for the bullish scenario. But of course, we're currently with the prices being here at the 8,767, we're really looking to see how it responds in and around this area. And if we do drop down below, then of course we can anticipate perhaps being supported by the 200 exponential moving average in there, the sort of 8,590 level, but quite likely as well, of course, to come down to 8,400 yet again. And then it becomes a question of what things will look like at that particular time. Of course, you'd have seen then these also the stochastics would snake around and come back to the downside potentially. And in the meantime, if we did get some upside, maybe we'd go up there and it would look like we were being rejected from this zone here and back into the extreme bearish zone, which is something like what happened over here. If, for instance, this is not a fractal, this is just showing you how these things can sometimes go down. Of course, I'm aware that the charts are quite ugly behind me. I'm sorry for not making them all pretty. But you can see, oh, that's the wrong tool. You can see here that in this period here, we came up, sort of tested off of this coloured background zone and back into the extremely bearish zone. I don't want to use the word oversold because as you can see here, that resulted in, just in terms of losing what we'd gained, that was more than 10%. But in terms of where the move actually went to overall, you're looking at 15% downside here, just between these 2 points here on the, well, actually this point here on the stochastics, but with prices kept going on down despite the fact that they were turning up the way. So you really don't want to be coming back in here and giving us another taster, having gone gone up towards this line of the extreme bearish zone, because volatility can of course come into the market, and these things are not, like I say, they're not a firm roadmap, they're just a potential or indicator. They indicate, they don't dictate. So yeah, and then of course what would it look like on the RSI if we did come up? We could be testing up above this moving average. I use a moving average on the RSI, and we'd also be moving out of this bearish control zone back towards the neutral zone, and that's where you want to be, of course, is above the neutral zone. It really is a sort of basics of this thing. Of course, you want to be up there, but when you go through these things, you can be rejected on the first pass. This is ever so common, and that really puts into question again, not into question, but just when you bear that in mind, that the fact that there's this drop off in trading activity, and how these things often get rejected on their first pass, that you could see some sort of volatility around this area where we go up and down a couple of times before making it through. It could happen. It could fill in this area as well, I suppose, as another thing. But of course, as well, what could happen is it could just shoot right through. So we'll have to wait and see how it all pans out. If it were to shoot right through, though, I would expect that we would find a great deal again of potential resistance, therefore profit-taking targets and whatnot up at that 9,500 level. And it's not. This isn't just the only Fibonacci thing that we have at play. Of course, there's a couple more. And you can see if I put that one back on and that one back on, that those two Fibonacci's retracements come from the highs in June down to the lows in December, and then of course the all-time highs down to the lows of the previous bear market. So they're quite longer term retracements that we're looking at there overall in terms of the dynamics in the price. Of course, as you're getting towards these areas, there's a lot of historical sort of action that could have gone in and around those areas. So when you look up towards that 9,550 where the 236 is, which would invalidate the Fibonacci, so to speak, that we're currently using, or at least declare it potentially as being kind of done for now, then you'd also be going through these two other green lines at the time, which are the 382 of the June Fibonacci, June 2019, and the 382 of the all-time high Fibonacci retracement. There, we'd have both of those in there. And of course, you'd be looking at these moving averages of the 21 EMA and the 50 simple there as well. And of course, this green line, this is a 55 EMA. This one here, I'm pointing at now. So all those things tying together would mean that it would have achieved something quite a great deal there all at once. And to achieve such something which is like so significant, I suppose, in a way, like with so many factors of confluence, I suppose that's what I'm trying to say, and only doing it off the back of one millionaire's efforts going 100x long is probably not that significant, or whatever. It'd be a kind of gooey counter against the grain. That so I'd be really looking for this to happen with a degree of more volume than just what it would require to take to do that. So I'd enter caution in here as we look towards these profit-taking lines, these upper upside resistance lines, and that'll have to do us, I think, for today. Thank you so much for tuning in, and I'll see you again tomorrow, or hopefully I won't have any headaches. And actually, I'll wrap up here and say, if you've managed to make it through the whole way towards the end of this video, then you're part of an exclusive group of people who will probably actually want to know that when it comes to the 7th of March, I may not be able to put up videos. It depends. I'm going to really try, but I've got a lot on that particular day, and actually I'm traveling from very early in the morning, so might not be able to do it. So we'll see how this pans out, but I'll of course keep everybody up to speed as we're getting there. But now in advance. So all the best. Thanks for tuning in, and I'll see you in the next one.